Hello everyone, welcome to Let's Go Money. Before we go into the details, if you have not watched the introduction and money management videos, please do. It has the basic concept of wave theory and the indicators we use. The money management will give you an idea of how to manage the trade. The link is given in the description. Today, we are getting a trade setup in Eicher Motors. Currently, we are already in a trade. So we have to be careful in how much we need to invest more. So let's first go to the basics to identify what the trade is, and then we will decide how much we can add further more to this trade. So basically, for a longer perspective, just to give an idea how we trade, so I'll just show where we are in this trade. So basically, so it has made an impulsive move on until 2018 time frame, and then it had a bigger correction down to complete the corrective wave. Then it has touched the retracement level on a weekly time frame. So this is like completing an impulse followed by a. That's the default pattern for default waves in a pattern. So once an impulse and A completes, then we are in a B wave. So B wave can be can go without breaking X. It may come down for a C, and then it can go for next impulse, or it can go break the X followed by a correction to C, and then it can break out. So and then it can also, the C might even come down further before it breaks out. So there are different combinations, or basic combinations what you will see. These are all different types of patterns we call. So in this chart we are in the B wave, and basically if you have seen, A wave has completed the retracement, so and B wave is very impulsive up, so we are not expecting it to come down at this point, and now it is also doing a consolidation at this point for further move up, and we are at least expecting it to break the previous high before it makes the correction down, or it may even go touch the retracement to the target point before it makes the correction for a bigger corrective wave, then for the next longer move. So at this point definitely we are in a bull market, and as basically it is in the corrective wave, and now it might start its move up. So if we go back to daily graph, you can see an impulse followed by a correction, A wave followed by B, then SC. So this X, B didn't break X and C didn't break A, so this wave is called contracting pattern. So if you see this, X followed by A and B and C are within the range, so this is called contracting flat, and then we are expecting another move up. So at this point we are expecting this pattern, and it has actually completed that pattern on a daily, and if you go to hourly, you can see how the C wave has completed from a daily point of view. So this has completed this pattern for an impulse down, and then it made an impulse, it made an impulse, then it has corrected here for further down, but it has, and we are waiting for a breakout trade for entry, and that is how we have entered the first trade, and that was on end of I think first week of January, and we were in that trade, and that had an impulsive move. So we were in the trade, and basically this is the impulsive move up, followed by it had a fast correction. We didn't expect this correction to be happening, but we didn't take it out because this was an impulsive move. We didn't expect it to go down immediately. So then it had a bigger correction here to complete this pattern for further down to complete the whole pattern. So now this A in our hourly, we have completed the impulse followed by A. I hope this is complete, unless if we have a further move down before it starts. So this is also a possibility. So we have to be careful when we set the stop loss. So now, since it is breaking out, I think we are looking for a trade at this point. Since it has a breakout, and it is consolidating at this point, so our trade will be just above this breakout, not above this breakout, which is right now. Basically, we just let me go in a little bit, zoom on it. Yeah, so basically we are in the right place to enter the trade. So which is broken, and it's anytime it can go up. So our entry point is 2640, so 2640 rupees. So let's add the trade in the chart. So our entry point is approximate, yeah, it's 2640 rupees, and our stop loss will be slightly below this, as there can be a possibility it can retest, and we don't want to be taken out. So, and our target for this trade will be around 3000 rupees. So this is our trade setup and the entry which we have taken. And our risk to reward is approximately 3.3 times. So that's not a bad trade. We should at least have more than 3. That is a good trade to enter. So let's populate this, and basically, before we go into the spreadsheet, I just want to show what is the thought process behind this. So based on this impulsive move, our expectation is impulse followed by a correction, which is A, and we are expecting this correction is done, but this can be a possibility that the correction might retest one more time, possibly, but we are not expecting that. So after impulse and the correction, we are expecting another B wave breaking this, and then maybe there may be a correction to complete this sideway move for a further up move. So this is our expectation, but let's see how it goes, and we will track this in our weekly trade report. So let's go populate the sheet. Today is Feb 2nd, sorry, Feb 10, my bad. And Eicher Motors, and we entered at 2640 rupees, and we already, as I said, we were in trade, and we are in trade, and it was entered at 2600 rupees and a stop loss of 200. But now we have moved the stop loss to something around 2500 rupees. Let's keep it that way, it's to a round number, and so this will also be 2500, which is close to 3 times the target. Okay, so with that, stop loss is around, so this is around 140 rupees. This is stop loss for this. So with that, we can get up approximately 35 shares, which is actually 0.5% of our max loss if it doesn't go our way, which is we will lose 5000. But since we already had in trade like 25 stocks, we don't want to lose much. So here, since it's 140, and even for this it's going to be $100, so we may not lose 5000 rupees, but here we'll be losing 2500 if it goes down, because we moved the stop loss. So here we have a maximum of 2500 rupees. So this will be approximately, let's go with 20 stocks instead of 35, so that we don't want to lose more than 5000 in any trade. And let's combine these two trades as one trade, and so total stocks we have is 45 in Eicher. So that's a good investment right now. Yep, so this is the trade we have entered. Let's see how it goes, and we are in the month time frame is what we are expecting it to reach here. Maybe it may be faster depending on how the waves are, if the waves are impulsive. Also, I want to let you know that we have earnings report on 14th February. So yeah, there can be a big movement based on the report, so we have to be aware of it. So please make sure you are aware of all the trades or the risk which is associated with it. Yep, so that's the trade, and we will be following it in our weekly trade report, how it progresses and what is the next step, what we will do. Thanks for watching. I'll see you in our next video.